Stock markets around the world are tumbling this morning because of bad news from China. The Shanghai Index fell 8.5%, and Japan's Nikkei lost more than 4%. Major European markets opened lower as well. The Dow is already coming off its worst week in 4 years. The index dropped more than 1,000 points. CBS News financial contributor Mellody Hobson is with us from Chicago. Mellody, good morning.
Good morning.
Why is China rattling global markets so deeply, Mellody?
Well, all roads lead there, and the story is slower economic growth in China. In August, we saw their manufacturing activity drop to a 6.5-year low, and we saw their exports plunge 8%. That spooked investors there, and the ripple effect is that it has spooked investors around the globe who expected China to be the engine of global growth.
So what happens if this sell-off continues here at home?
Well, if the sell-off continues here at home, I have to say that I think that you're going to see a buying opportunity. Suddenly, U.S. stocks have corrected. They're down 10% from their highs, and they're at valuations that are much more attractive. We've been in a 6-year bull run, and bull markets don't go on forever. We just can't expect that. So now that the steam has been let out of the pot here, it may be an opportunity for investors to step in, and we may see some bargain hunters do just that.
The bet had been that interest rates would go up here in the U.S. in September. Do you think that this sell-off changes that?
Wow, I would not want to be Janet Yellen or a member of the Federal Reserve Board right now. I have to tell you, this is so hard. On the one hand, the U.S. economy overall looks good. Our jobless numbers are at historic lows. We're seeing housing starts at 8.5-year highs. Consumer prices are up, so all of that looks good. But then we have this global growth story. And if you're her and the other members of the Federal Reserve Board, I have to say my guess, when in doubt, don't. Maybe they will wait. But ultimately, rates will go up.
Mellody, we'll keep watching those markets. Thank you.